In order for it to be passive for someone, it has to be active for someone. There's always another deal. You have to be willing to walk away, and you need to be convinced why to do it, not why not to do it. Be skeptical, because this is a sales business just as much as anything. We probably need 20 to 30 deals to see before you do one.
Investors and operators, welcome back to the Invest Clearly podcast. In today's episode, we hear from Dylan, a part-time investor and accounting manager based in Alaska. Dylan shares how his background in traditional finance shaped his early assumptions and what changed as he started exploring private lending, syndication, and alternatives more broadly. We talk about how he evaluates operators, the red flags that shape his due diligence, and why clear communication, especially post-investment, is crucial to his decision-making process. Dylan also reflects on learning through experience, why he's skeptical of the term passive, and how he's building confidence by staying engaged and asking better questions. Let's get into it. Great stuff. Dylan, thank you very much for hopping on and doing this with me. I know we met through Reddit of all places, and you've got very active and supportive with Invest Clearly very quickly. So I very much thank you for that. So before we jump into things, why don't you tell us a little bit about you, your background? Are you a full-time investor? Do you do this on the side in pursuit of something bigger?
Yeah, it's fun to connect. Super excited to see where Invest Clearly goes and how it serves the community. A bit of my story. Grew up in the South, went to college at Clemson, studied finance, accounting. Always have had an interest in investing and business, and dabbled in some entrepreneurial endeavors. But was very traditional in my framework. And my dad has been in the financial services industry my entire life. And so I grew up around hearing about markets and 401ks and IRAs. And, that was basically all that I really knew about, and felt like other areas were off limits. I wasn't a real estate guy. I don't want to start businesses necessarily. So the journey into alternatives, we'll call it, has only been in the last few years. And so I've been a W-2 guy since pretty much after college for the last 15 years. Currently accounting manager for a large freight carrier that serves the Pacific Ocean communities, Alaska being one of them, where I live now. And so, yeah, it's a part-time thing at this point, but I have a lot of aspirations or hopes to get more involved in this space. Really love the people, really love the opportunities, and just the access we now have that I didn't know I had, right? And there's a lot of empowerment in that, and taking ownership, responsibility instead of relegating that. So real passionate about it. And I've done a couple syndications now, looked into hundreds, maybe more as well. So been a journey, been humbling, but good. So
Sure. And what does your portfolio look like currently? And from like an asset class perspective, how many deals have you done and things like that?
yeah, so there's obviously the syndications explicitly, which is part of my portfolio, I guess, and I have currently 3 of those: 2 multifamily real estate, 1 oil and gas. That was a big undertaking to even start one and figure out how to make a decision and feel good about it. And that was late 2022, which ironically wasn't such a good time to start in multifamily real estate syndication, as we've seen many stories arise. So there's those 3. And additionally, really the entry point for me was debt, was like private lending in real estate type players. And that was back in like early 2022. And that was really the entry point into this vast world. But it was a good place to start because it kind of got you learning and thinking and working with different groups, learning about different projects. And that was all I did for the first like year or 2. And then I started to kind of learn about syndications and how to discern those and due diligence and the players in the space. So done a couple full cycles on private lending, no major losses. Luckily, however, I did learn the hard way that like personal lending is not always a good idea, especially when there's no collateral. Unfortunately, the person who I lent to passed away unexpectedly. And that's been a nightmare or just really heartbreaking. So definitely some painful lessons. I've also done some mortgage notes, full cycle on that. That was another world I didn't know about. So I've kind of dabbled in a lot. But I've kind of learned along the way my investor DNA, what sort of stuff is interesting to me or I understand or not. What kind of operator do I want to work with or not,
Sure.
like that. And more recently, I've gotten into film bridge loans, the film industry, bridge loans. So that's another debt play, but a different angle.
Interesting.
Super interesting and super awesome, actually. It's
Yeah.
been super cool. So it's just kind of being open handed or being open minded, networking. And I think that's been the biggest shift for me is like just being open to ideas that are out there or just different, unconventional. Cause it's like, oh, I don't know anything about this, but I'm going to learn or I'm going to be open to hearing more and exploring it. Right. So,
Sure, sure. How are you finding these sponsors and opportunities? Because we've talked about without naming sponsors, we've talked your portfolio a little bit, and it's not the commonly known gigantic,
oh, yeah.
ones out there. Like, how are you finding these people and opportunities?
Yeah. So initially I didn't know anything or anyone, or it's like, it's funny because from the outside, you're like, you almost feel like there's no deals out there, or you maybe come across one or two. Obviously, Facebook has plenty of suggestions. And you go from like no deal flow to like an insane amount of deal flow once you start kind of tipping into your toes in. And then you get overwhelmed. You're just like, how in the world do I put in the time and the effort and energy to discern and research and all this? So initially, it was a private money club community with a private lending, which kind of helped me feel a little more comfortable with the players that were in that platform. But communities are been crucial. I'm very relational, very big on like networking and that, and just learning from people. Obviously, you can try to find mentors or pay for coaching or join masterminds. And so a lot of the opportunities have come through communities I've joined, podcasts I've been listening to, and just kind of finding players that I either respect or people who seem genuine, transparent, honest, experienced, and not necessarily like the flashy, charismatic people, but which I've been prone to, and I ended up lending to one that was a terrible experience, but luckily, got my money back. But yeah, it was just like a good learning lesson about what kind of people do I want to work with, and deal aside, it could be a stellar deal. I don't
Yeah,
care if it's not a good fit for other reasons. I don't want to play ball, but you don't really know what your rules are until you start to kind of get in the game and start to meet people and maybe do some deals or try some things out. So, there's been some key relationships along the way, people who are ahead of me who already either are involved in certain groups or invest with certain players. And that helps, but that just doesn't mean you should do it. It's just
hmm,
kind of gets you some clarity or gives you some focus
sure.
to dial in and maybe dig deeper, right? And so it's a journey, and I think I'm always looking to build relationships and learn what people are doing, and then you can observe and just kind of patiently watch sometimes, and maybe down the road you feel there's an opportunity, and you feel like, okay, I think this makes sense. So I think it's always, it's the game. It's a slow game sometimes, and I think there's a sense of like FOMO and like I got to get in. The door's closing, and um, that sort of salesmanship is. I mean, it's the reality with syndications, especially and such, but it just can really circumvent our due diligence process and just the time that it takes to build relationships.
Yeah,
We can't rush relationship anyways. Like you don't go get married with someone a week into knowing them. Like it takes time. And that's kind of what this is like in a way. Like you're entrusting them with sometimes large amounts of money. And once you wire that money, the dynamic shifts dramatically.
right.
Like, and so I think there's some challenges with that and people being okay with that. I wasn't okay with that. I was like, oh man, this is so exciting, or I don't want to miss out on whatever it was. But the more that I've been in the game, the more I realize there's always another deal. Always. There's 100 of the deals right now that are open and that are maybe compelling. So I think
Yeah,
that's been a shift for me with like something I, would have wanted to know at the beginning was like, there's always another deal. Like,
yeah.
you have to be willing to walk away and just, you need to be convinced why to do it, not why not to do it. So,
Yeah. Another guest recently brought up under the, what part of past investing needs to die, that false sense of urgency, the three
Oh
spots
yeah,
left, at
that's
this, at
yeah.
that. That was someone else had brought that up too. This episode, two things I want to dig into a little more. You talked about, finding that person that is transparent, you trust, evaluating that individual deal aside, you had said, and then you had also talked about a set of rules. These may be the same answer, but what does that process look like when you're actually evaluating the person? What do you go through? What's your checklist? And what are those rules that you had learned you didn't know and you know now?
Yeah. Yeah, that's good. I think for me personally, the one of the big lessons early on with on the private lending experiences was when it comes to discerning an operator and if we're a good fit and if I want to work with you long term, which sometimes it can be 3, 5 years, right? The biggest thing is like communication and having space to bring things and questions or just have room to process and for that to be validated or honored. Now, obviously, people are busy and juggling a lot of different things, investor relations, all sorts of things, fundraising. But it's like if I'm going to participate with this person, it is very important for me to feel like I can communicate and like that is something that isn't belittled or annoying or I don't get ghosted.
Yeah.
That is like the worst. And that is like causes me so much stress, just worry of like, oh my gosh, did I make a terrible mistake? Or, it just produces all sorts of things that are not healthy for me.
Do you ask that question up front, or how do you kind of
Yeah.
test that?
So, yeah. And so that can be a tough thing, obviously, when they're in the sales hat.
Yeah.
Communication's awesome. And that's absolutely something that happened to me with one particular person. And they were very responsive. We had great conversation and it was really positive. And then the moment I wired the money over, I, had brought up something that I was kind of taken surprised by, just like when the clock started with the interest,
Yeah.
and no response, no response. And I'm like, dude, you serious? And then I had to like keep, bothering this person. So it isn't always easy to like figure out unless you have someone on the inside, right? You have someone that is an investor currently, has worked with said operator, they could kind of validate their communication styles and frequencies and what that's been like for them. Also, I think part of it is like doing little teasers, like, okay, I'm gonna either join a webinar or I'm gonna follow up with some questions. Like, in fact, the other day I was looking at a pitch deck at industrial outdoor storage, which is an interesting asset class I never looked into, but it was like, this is kind of cool. I kind of get the model, the business plan. I want to learn more. So I like reached out to this GP sponsor that was putting this deal together just to kind of put the feelers out there. I never heard from him once. I sent an email through their website. I'm like, okay, well, that's telling. Pass. So I think there are ways we can kind of put the feelers out there. It's not always perfect between obviously insider investors is ideal, but also like doing some different trial and error. And I think part of it is like having confidence as an investor. You know what you're not necessarily you know what you're doing, but like I can ask good questions and my questions are important. They aren't silly or they aren't stupid. And I'm not just gonna bow to the expert GP, which sometimes we feel inferior as
Hmm.
investors, especially if you're newer, you're like, oh, I don't know what I'm doing. I don't know what to say or ask. So I just won't do it. But then you don't have the opportunity for them to see how they respond. Do they belittle you or do they honor you? Do they sound knowledgeable? Do they have a good answer? So I think part of it is we have to kind of give them opportunities to see what their communication is like, to see, okay, yeah, this I like what they're saying. I appreciate how they're approaching it and they're taking me serious, because if they're not going to take you serious now, why do you think they'll take you
Yeah.
serious or when they have their money,
Yeah.
it's a shift. So that's kind of been my experience. And it's definitely not like easy or like necessarily a formula, but I think a big part is like growing in confidence in my ability as an investor to like make educated decisions, due diligence, and not like I'm empowered, right? I'm empowered as an investor. And that's a huge shift for me,
Yeah.
which I didn't have at the beginning.
Yeah. That's great. And when you think about due diligence and we move from the GP to the deal, do you have immediate red flags you won't pursue? What is your process like to evaluate the deal as well, in addition to the sponsor?
Yeah. Yeah. I have been building out kind of like been and wanting to build out and started with a due diligence checklist. Like, and obviously there's some general principles across all asset classes. And then there might be specific things for oil and gas or for real estate multifamily or for self-storage, because they're each unique and they have different drivers, different market conditions, factors to consider. And I think like, because there's so many players in the space, it's a lot of stuff is hard to prove, right? Like whether it's the AUM or the deals they've done or the capital they've raised or the IRRs they've achieved, you name it, it's like we have to be skeptical, right? Because people can promote anything and we really don't have a way of confirming some of these matters, right? And there's definitely a lot of evidence that what people said wasn't actually true and it became clear in a bad way. So I think that's the big lesson is like, be cautious, be skeptical, like healthy skepticism, because this is a sales business just as much as anything. And I mean, especially if groups are needing deal flow, right? To keep the lights on, they have to keep raising capital and it's a reality.
Yeah.
And so I think there's a healthy skepticism that we need to have, that not everything that is promoted is true or is, we take it at face value, but we need to dig a little deeper and be willing to ask questions, ask hard questions. And so for me, I didn't really know what I didn't know. I didn't know what questions to ask. I didn't know how to review a PPM or how to even review a pitch deck. And so part of that is getting a lot of reps in. And I think that's something that takes time, but also like we need to we probably need 20 to 30 deals to see before you do one, maybe. Ideally, you could get help from someone who's done a couple and knows what prep is, knows what a waterfall split is, knows what acquisition fees are all about and what's market. And the only way you really know that is by looking at a lot of deals, right? If you just move on your first one, it could be a horrible, from a LPGP arrangement, but you wouldn't know. So that's often a problem is we don't want to do the work on the front end and figure out like what sort of things even to ask and what sort of things look off, right? It's like knowing a true dollar, as the example goes. Yeah, how do you notice counterfeits, right? As you study the real thing. So you kind of need a lot of reps to say, okay, this is pretty marked or this is way off. And so that's certainly part of it. And I think obviously it's nice if you can find and have people trust that have had good experiences. That's not a guarantee or means it's necessarily a shoe-in, but that can also have some be helpful. And experience is certainly important. We talk a lot about track record, and that's even a bit tough sometimes to guarantee
Contextualize.
or
Yeah.
know is like what track record can be kind of skewed and misrepresented too. But that's certainly something that can help build confidence and build trust. And I think the thing that I've noticed with a lot of like the scandals and scams that, have been kind of arisen, ATM scam, the carbon recapture oil and gas scam, and, many Ponzi type things is that what often I notice is it's very hard to understand like the business model. And like there's a lot of layers and like maybe lack of transparency about how does this really work? Like, how do you really generate those returns? And, obviously they have a good message and a narrative that people bought into, but obviously as things unravel, that often is like, oh, well, now we see. But to me, I think the thing that I'm realizing is I need to really understand like and be able to explain to you or whoever, my wife, for instance, like, how does this really work
Mhm.
on a basic level? If I can't explain it, like if you're doing some Forex trading or some options trading strategy, and I really don't understand it, but it's like, oh, it's 12% a month they're making. It's like, well, I don't care what it is, like, because that jacks up your risk massively. And, I think I'm trying to shift the things that I understand that I can kind of, not that I have to be an expert in by any means, but I need to understand kind of the main drivers and obviously how could this thing sink? And operator, there's risk, deal specifics, there's risks, macro risks. But, we want to kind of make sure that I can explain it and understand it. And then we could talk about collateral. That's also another biggie that I've learned, with my one loan didn't have any collateral. And ironically, that one has come back to bite me. And I think and so the due diligence is something that has been evolving, and that's just by getting in the ring and learning how to fight, like
Yeah.
learning how to box, anything you want to do. It's a maturing process. And obviously I did take a class or a course from, Alexia's, a mutual friend of ours. And I got some education from someone who's vastly more experienced than me. And we looked at deals together. We looked at pitch decks. We talked through it. And
Right.
so there is ways to educate yourself as well, which was very empowering, but also kind of eye opening of like, there's way more going on here than I could have imagined. And there's kind of a holy fear too of like, we don't want to just jump into this stuff, like, and I think that's not a bad thing.
Yeah.
There's wisdom and fear, and like having a realization that, we don't ever know everything, we don't see everything, and we can kind of humbly come and be a student.
Sure. There's wisdom and fear. That's definitely going somewhere for
Well, it's
this episode.
Proverbs 1.
Oh,
Proverbs
okay.
1.
There you go. Cool.
Well,
Well,
fear of the Lord is being a wisdom is actually the full verse, but
yeah, yeah. All right, Dylan. I know we're coming up on time. I got to ask my favorite question. What part of passive investing do you think?
oh, I'll probably go with the concept or the language term passive investing. And I'll steal a kind of a quote from an operator that I invest with, actually. I think he said this. I don't know if he borrowed this, but it's, in order for it to be passive for someone, it has to be active for someone else. Right. And so obviously there is a sense of we are putting a lot of the activeness, operating, decision making, fundraising, selling, exiting, et cetera, onto a GP or a group or a sponsor, right? But like because of that, like, because we are shifting that to another person or group, like that doesn't mean it's active for us, especially on the front. There's a lot of ness to making these decisions and making good informed decisions. And even along the way, I mean, I'm constantly engaged with all of my deals, all of my groups, and that's kind of my style. But like, I think that's part of stewardship. And like, it's like if you were to take your precious son to a daycare, like you are shifting
Hmm.
that responsibility of watching your kid and making sure they don't do something crazy or stupid. You're shifting that to this other group, but that doesn't mean you're not active in that, in the decision making and who to go to, who to trust. And even when you go and take them and you keep going, are you just like, oh, I must be all good? No,
Yeah.
not. You're going to be like, hey, how's it going? Hey, like, is this still a good fit? Should we keep going here? Are we seeing results? Are they safe? You're going to be ongoingly, because why? Because you care about your kid. You're like, you're still this responsible parent over the kid, right? Not the daycare. So same way to think about your resources, right? It's like we are, called to be responsible stewards of our resources. And just because we shifted over to the GP group doesn't mean we're still not active. So I
Yeah.
think that active versus passive could be rebranded. I'm not really sure what would be the proper replacement to better articulate like that dynamic, but I don't love that word passive.
Yeah.
I don't think it's the best concept, and I think it's misleading, and maybe that's kind of like a carrot that's dangled or a flashy kind of, like, we find that a very appealing. There's a reason why that's so appealing. Like, I think we all want to relegate our responsibilities, I know me included. Hey, just make decision. I don't want to deal with this. But like,
Hmm.
that's not really the way to maturity, and that's not really a way to have, obviously good results and that fit with our long-term plans or goals or whatever. So maybe we'll come up with something and then we'll try
Yeah.
to change the term.
Change
I
the
don't
verbiage.
know.
Yeah, there you go. Awesome. Dylan, thank you very much for doing this with me. It's been awesome getting to know you. I value the support and the feedback and everything you've been sharing to make Invest Clearly better. I know you thrive on community and networking. If people wanted to get a hold of you, other LPs, what's the best way to do it?
Oh yeah. Yeah. They can look me up on LinkedIn. Yeah, my name's Dylan Robertson, Dylan Robertson, and message me or connect with me there. And yeah, I'm also join, different groups on on Reddit. But yeah, I think that'd probably be the best means. I don't have like a platform or
Yeah,
anything
no.
like that. But yeah, I love helping people and, connect people in the space, people who are brand new or, that are more seasoned, experienced. I definitely have, so much to learn, and it's just fun to hear about what other people are into or stuff they're looking into. And yeah, I'm a huge fan of just the vision of Invest Clearly. I think it's, filling a huge void in the space, and super excited about how that will be a great tool for due diligence for many LPs and help increase accountability, maybe transparency. It's awesome.
Awesome. Well, thank you very much, and I look forward to continuing to work with you and
Yeah,
stay in touch. Good stuff.
absolutely.
Thank you, Dylan. Thanks for listening to the Invest Clearly podcast. To find verified investor reviews or to claim your GP profile, please visit investclearly.com. If you enjoyed this episode, please remember to like, subscribe, and leave a review, because that's how other people find this show. Till next time, invest clearly.